Hey YouTube, what is up? My name's Casey. Welcome to Lions Den Investments and Reviews. Got a great video for you today. Today's Thursday, January 6th, 2022. And in today's video, I want to talk about the crypto market and all the fear that is taking place right now in this crypto market. There are a lot of people are thinking that this bull run is over. And if you're looking at the charts here right now on Bitcoin, I've got the daily chart pulled up. You can see this blue line that I've got drawn out here. Does that look like a bull market? Does it look bullish or is that bearish? I mean, even though it's getting flat, we're still in an uptrend. Okay, so I want to talk about this real quick and compare this kind of to like what you were seeing back in March or January timeframe of 2020. All right, because what do you remember taking place back, when the pandemic first started? What happened was you had the economy and the market tanked. Okay, there was a lot of fear in the air. A lot of people were scared, and then what happened? The market turned right around. And why was that? That was because the Federal Reserve turned on their print press and just printed into oblivion. Over the last 2 years, what we've had like 25, 30 trillion dollars printed up. Okay, so what I'm seeing here is something similar. If you just zoom out and you look at the macros, I'm seeing something really similar play out to what you saw back then, and I'm going to show you evidence of that here moving forward. But before we do that, I want to take you over to my website real quick. Okay, I'll leave a link in the description below for this. It's called academyofcrypto.com. So if you guys are new to the channel, go check it out because I've got all sorts of stuff in here with like crypto projects, exchanges and wallets. I've got some free course material in there that shows you how to navigate blockchain. Basically facilitate your own transactions on Etherscan. Guys, I want to tell you though, I'm not selling any products. I'm not pushing any products on here. So quite frankly, I don't care if you go to the website or not. It's just out there for you to go check out for yourself. Because I've also got like the Fear and Greed Index, for instance. So if we go over here, okay, and I built this website myself, so it's not the greatest website out there, but it's something there for you, and I've got everything all there in one place for you. But here's the Fear and Greed Index right now. We're at an extreme fear of 18. Okay, now if you're new to the channel and you're watching this for the first time, I want to let you know real quick. Over here on this channel, we've got people who are investing who are straight up lions. Okay, that's why I called this Lions Den Investments and Reviews, because we're lions. When there's fear on the streets and we're smelling the blood, we're frothing at the mouth, man. And right now, with the fear index at 18, there's no reason to have fear. I keep telling people on my channel, have no fear. Right now, you should be greedy as hell. And I'm going to prove that to you. So if we go over here, look at this. Ethereum plunges 13%, down more than Bitcoin after Fed spooks crypto markets. Okay, now this is very, very crucial in regarding, what I was talking about with the current market, reminding me of January through March of 2020. It's very crucial because what they're talking about here is the Federal Reserve and their rate hikes. Okay, so the Federal Reserve released the minutes of its December meeting showing that it eyes a faster timetable for hiking interest rates in 2022. The minutes show that the Federal Open Market Committee, FOMC, is in favor of raising short-term rates sooner or at a faster pace than participants had earlier anticipated. Okay, guys, this is FUD. It's FUD. You know why? Because the Federal Reserve cannot raise interest rates. All right. Now, when we get to talking about interest rates, here's one thing you need to know as an investor, okay? When they raise interest rates on the open, the federal rate fund, when they raise those interest rates on that, what it does is it takes money off the table for investors. Think small businesses, large institutions, corporations. When they want to borrow money, okay, they have to pay that back, right, with an interest rate attached to it. So if your interest rate, which is your federal funding rate, is at 0%, that means these CEOs, these business owners, the hedge funds, they can borrow money okay? And they know that they're going to be able to pay that back at a very low interest rate. That incentivizes people to take out money and dump it into the market. This again is nothing but fear, uncertainty, and doubt because they cannot raise interest rates. If they do that right now, it will completely destroy the economy or what's left of it. Okay. Now their policy, their monetary policy, it will never change, and that is they have to create debt out of thin air. The only way they can do that is to create new loans. And if you don't have people incentivized to borrow money, then money velocity slows down. Money velocity, guys, is nothing more than the exchange of value, okay, between two parties. And it's done through the form of a currency. That's money velocity. Now, if that money velocity slows down because people aren't borrowing money to expand and grow their corporations, guess what? The whole economy freezes up and you have what they call a credit freeze, which is what you saw back in 2008. Okay? So if you understand this concept and you understand where we're at right now, their monetary policy is to print more money to keep the whole game going, keep the whole show going. All right? So they have to print up more and more money each year just to keep it going. So just because they come out here and say they're going to raise interest rates and 3 rate hikes for next year, it means nothing at this point because you have something going on, the spread, okay? And I'm, I'm a victim of that like everybody else. You know the story about my father right now. He's basically in critical condition fighting for his life. But there's millions of us out there that are impacted by that, and they're using that as a tool because they cannot raise interest rates. So what are they going to do instead? And this, guys, you could call it a theory if you want to, but if you know monetary policy and you know how the Fed works, this is pretty much facts. Okay, what they're gonna do is use the spread, just like they did back in March and in January of 2020, as the excuse to fire up those print presses and keep printing into oblivion, which again keeps your interest rates where they can back out on that and say, hey, look, we can't raise interest rates, we got to keep them at zero. Okay, because what's that do? It incentivizes people to borrow money, which gives them more loans where banks can make more money. And the only people that really usually benefit from this are the people who understand this and the banks. Okay? So keep that in mind. I'll leave a link in the description for this below so you can read over the article for yourself. Going on to the next one, though. This is a good one. Bitcoin fills 42,000 December price wick as analysts say party is just getting started. How about that? It's like Warren Buffett says, you heard me say it earlier, when there's blood on the streets, and you're smelling that fear, you better be frothing at the mouth like a damn lion. Get ready to buy, because guess what's next? They're going to fire up those print presses like I was just telling you, and off we go. And you're going to see something basically just like what you saw, from 2020 going all the way up into 2021. And I think that's what you're going to see here too. Now, it doesn't mean we can't go lower. They may give us a deeper head fake with crashing the markets than expected. But here they're saying Bitcoin delivered fresh volatility on January 6th as range-bound behavior saw its first shakeup in weeks. Open interest remains high. Data from Cointelegraph Markets Pro and TradingView showed Bitcoin and USD dropping overnight to hit 42,000 for the first time since December. Although it's not the upside breakout that we had expected, the move was nonetheless predicted. Bitcoin essentially is filling the space left after it briefly wicked to 41,800 earlier last month. So basically, they just go on to say, honestly surprised we didn't see more of a flush today. If this was aggressive longs built up, it could still resolve to the upside. And William Clemente, he's an analyst, okay? He wrote in a series of tweets about the action. He says, all I know for sure is this party is just getting started. And he says, by the way, this isn't a doom post. Honestly surprised we didn't see more of a flush today. This was aggressive longs that were building up. and it could still resolve to the upside. And he gives you a few charts to look over here. But that's the gist of the article there, guys. And again, if you go back to my website, you can look at the Fear and Greed Index. Here's another one for you too. We got the CBBI index indicator. This is one of the most accurate indicators out there. Okay, and I've gone over this in previous videos so that you can go watch. I cover it right here on the site. And right now if we go to the site, the CBBI indicator is at 48. Okay, which means the confidence in the market is it's not extremely low, but it's kind of right in the middle right now, and it's got people guessing. Okay, are we still in a bear market, or are we still in a bull market, or are we going into a bear market? So when that confidence goes to like 92, 95 and higher, that's when you want to get out, because that's when we're at an all-time high in the confidence of the market, and normally you get your blow off tops. And you can see that in the charts here on the website. If you go down and you look at it, it'll lay it all out here for you. I'm not going to go into that just for the sake of not boring you on this video. But again, if we go back to the chart on Bitcoin, okay, we got the downward trend still going. We could crash lower, and I told you $40,000 mark on Bitcoin is going to be make it or break it for me. Considering that if we blow past 40,000 here on the way down, then yeah, you're looking at a bear market. Okay, but we're not there yet. We're still not there, and they could probably wick this thing down to 40,000. Wick it down. I mean, where it comes down shortly and then gets bought back up like this from the buyers. So you get a wick down here to 40, and then immediately it gets bought up, and then we'll start turning around because we're getting awfully close. But that's really all I wanted to cover for today's video. I've got some more stuff I want to talk about on DogeGF. Okay, so for all my DogeGF investors who want a video on DogeGF, I'll be putting one out here probably either tomorrow or on Saturday. And I've got some cool stuff to cover on that as well. I don't know if you guys pay attention to Randi Zuckerberg, but she had a survey poll that she just did on DogeGF. And if we look at that real quick, I just took a picture of it. This is from YouTube. She asked, what is your favorite dog-themed crypto? And right now, Doge's girlfriend, DogeGF, is leading the poll. Okay, so if that tells you what the market sentiment is for meme tokens, and out of all of them here, you got Shiba's girlfriend, ShibaGF, Shiba Inu, Dogecoin, and then DogeGF, and I want to say it's Dogelon Mars. I hope I'm pronouncing that right. But out of all those tokens, DogeGF is leading the charge on that. And DogeGF is built around reciprocity, and I want to talk about that too in my next video as well, because I can kind of tie that in with my whole experience, situation with my dad right now who caught COVID. So stay tuned for that. And with that said, guys, have no fear. These markets are volatile, and like I said, when there's blood on the streets, be greedy. Okay. With that said, I will talk to you guys later.